Good morning, students. Today we are moving to the next topic, that is modern classification of accounts, that is from chapter number 6, rules of debit and credit. And we have already done traditional approach, that is classification of accounts under traditional approach. Today we are going to start modern classification of accounts. According to modern classification of accounts, there are three types of accounts. That first is asset account, next is liability account, third is capital account, revenue account, and expense account. These five types of accounts are included in modern classification of accounts. So first, asset account. What is asset account? As we know, asset account is related with all the assets. एसेट्स क्या होता है? दैट इज इकोनॉमिक रिसोर्सेज सच एज लैंड एंड बिल्डिंग, मशीनरी, प्लांट, फर्नीचर, बैंक, कैश, डेटर्स, etc. which accounts relate to the economic resources such as land and building, plant and machinery, furniture, inventory, bank and cash, debtors, bills receivable, etc. And liability account is related with all types of liabilities as creditors, outstanding expenses, bills payable, etc. And capital account is only related with the capital and drawings of the owner. Account of proprietor or partner in case of companies who have invested money in business, who is known as proprietor. It includes capital and drawings account only. And revenue account is related with all the revenues or incomes of the business, that is income from sales, discount received, interest received, bad debt recovered account, rent received, commission received, etc. And expense account is only related with the expenses and losses of the business, that is purchases is an expense for the business, wages, salaries paid, depreciation, bad debt, rent paid, discount allowed, commission paid, etc. Okay, so this is a modern classification of accounts. There are five types of accounts under modern classification of account. First is asset account, liability account, capital account, revenue account, and expense account. So now the rules for under modern classification of accounts, rules of debit and credit are: first, for asset account, if asset is increases, then we will debit the asset, that is debit the increases and credit the decreases. If asset decreases, then we will credit that asset. Liability account rules are opposite to asset account: debit the decreases, credit the increases. And third is capital account. Capital is also a liability for the business, so capital account and liability account rules are same, that is debit the decreases, credit the increases. Next is revenue account. Revenue account, debit the decreases, if revenue decreases then we will debit, and if income increases then we will credit that income. Expense account means debit the increases, credit the decreases. These are the rules that we have to follow while doing practical questions. So as we know that all the assets are equal to capital plus liabilities plus profit, and in case loss is there, then loss will be deducted from it. Okay, asset, I have drawn all the formats according to classification of account. First, asset account. Asset account means any type of asset, whether furniture, plant and machinery, land, etc. So here is the two sides of an account: left hand side debit side and right hand side credit side. And if asset increases, we will write it on debit side, that debit side is for increases. And if asset decreases, then we will write it on credit side. Liability account, same, debit and credit side. And if liability decreases, we will write on the debit side, if increases on the credit side. and capital account same as liabilities account, and revenue account debit if decreases, credit if increases. Expense account debit if increases and credit if decreases. Okay, today with the help of these rules we will solve a practical example. So let's read first example. Illustration number 4. On which side will the increase in following accounts be recorded? Increase, only increase will be recorded, not decrease. Also mention the nature of account. Nature of account means according to classification of accounts which type of account these are related with on the basis of modern classification of accounts. And according to modern classification of accounts we have 5 types of account, that asset account, liability account, capital account, revenue account and expense account. So here are the accounts. First we will write it as, first column is for nature of account, that we will mention the nature of account. And next, if we have asked that only increase in these accounts would be mentioned. So all the rules are different, that if any increases with debit then another increases with credit. So we can write it as debit or credit. First is building account. Building is an asset for the business. So nature of account is, it is an asset, that we have already written account, so we will write only asset. And if building increases, it means if asset increases we will debit or credit the asset, and if asset increases we will debit that asset. So we will debit the building account if increases. Next is creditors account. Creditors are our liability, that is outsiders liabilities. So creditor nature of account is liability, and if creditor increases then we will write it on credit side. Next is Abhishek, and Abhishek is the proprietor. Proprietor means capital will increases. So Abhishek is related with the capital account. All the owners account are related with the capital account, and if capital increases then we will credit. Next is number 4, purchases. Purchases is an expense for the business, so we will debit if expenses increases. Next is carries inward. Carries inward and carries outward is also an expenses for the business, so carries inward is also an expense for the business, and we will debit if expense increases. Next is cash. Cash is a tangible asset of the business, so it is an asset account and we will debit if asset increases. Next is a rent received. A rent is an expense, and if we have received it then it is an income or revenue, because under classification we have a revenue account. So if revenue increases then we will credit the account. Next is interest payable. Payable means we haven't pay it and it is due for payment, means due हो चुका है बट हमने पे नहीं किया, तो वो हमारे लिए क्या होता है, आउटस्टैंडिंग एक्सपेंसेस, दैट इज ड्यू बट नॉट पेड. सो पेएबल इज so it is an outstanding expense and it is a liability for the business, and if liability increases we will credit the account. And next is bills payable account. Bills payable is also a liability for the business, and if liability increases we will credit the account. Next is debtors account. Debtors account is also, debtors are also asset of the business, so if asset increases we will debit the account. Next is 11 number, accrued commission. Accrued commission means, accrued means which we have earned but not received. We can say also it outstanding income that we haven't received it, so it is an asset for the business and we will debit if it increases. And last number 12 account is bills receivable account, and bills receivable is an asset for the business and we will debit if it increases. So these are the modern classification of accounts. You can solve your questions like it, okay, and draw format with the help of pencil and scale. Thank you.